Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. If you have questions or topics that you wish to discuss, please chat those over now so we can be sure to get to them all. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So this is our daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, Fidelity RIAs. Secure your clients' 2025 Solo 401k contributions now. The December 31st cutoff explained. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please, again, chat them over now so that we can be sure to get to them all. If this information is helping you, please like this video as it'll help us to get the word out to other advisors, other solopreneurs, just like you. So let's first start out with the foundation, which is who's eligible for a solo 401k. Well, a solo 401k is referred to as a one participant plan. So it's for an owner-only business. So in other words, a self-employed individual with no full-time W-2 employees. So when we break that down, there's really two components. One is you need to have earned self-employment income that's reported on your taxes. For example, if your business is taxed as a sole proprietorship, earned self-employment income would be income reported on Schedule C of your 1040. Whereas if your business is taxed as an S Corp or a C Corp, earned self-employment income is income that you receive as W-2 wages from your business taxed as an S Corp or a C Corp. Finally, if your business is taxed as a partnership, filing Form 1065, earned self-employment income is income that's reported on line 14 of the K-1 that you receive from the business tax as a partnership. The other component is that you cannot have any non-owner, non-spouse, full-time W-2 employees. So full-time means someone that's working more than 1,000 hours per year with a year of service, or 500 hours a year for 2 consecutive years. Your spouse can participate in the plan as long as the spouse is working in the business and reporting their own earned self-employment income, regardless of the fact of whether or not the spouse is an owner of the business. In addition, a non-spouse can participate in the plan, provided that individual is an owner, owning at least 3% or more, and reporting their own earned self-employment income. So for example, if the business is taxed as an S Corp or a C Corp, each person would receive their own W-2 from the business. A solo 401k can be set up even if you have a W-2 day job, even if you participate in your W-2 employer-sponsored plan, as long as you've got that separate earned self-employment income with no non-owner, non-spouse employees working for any business owned by you or a spouse, if any. So now that we understand who's eligible to set up a solo 401k, let's understand the December 31st deadline, this cutoff, and what it means. So in order to preserve the ability to make all types of contributions for 2025 by the self-employed business tax return deadline, including extension in 2026, the plan needs to be in place by the end of the year. So the deadline is to establish the plan. The way that you establish a 401k is through the documents, because a 401k is a legal entity. It's a retirement trust. So like any legal entity, it's the documents that create it. So the documents are the key. That's what needs to be established in order to preserve the ability to open accounts and make contributions by the business tax return deadline, including any timely filed extension next year in 2026. So the key is to focus on the paperwork first. Many solopreneurs stress about getting the brokerage account open before December 31st. This is not necessary. The only priority is ensuring the plan documents are in place by December 31st. Everything else can wait until 2026. So you don't need to open up the accounts at Fidelity. You don't need to obtain the EIN number for the solo 401k. You don't need to fund the accounts by the end of the year. For all types of contributions, those can wait. So my solo 401k Financial makes it easy to meet the deadline because we prepare the documents within the same business day. So the plan is in place within the same business day, as long as the person submits the application and makes payment by December 31st, the plan documents will be in place. So that means your client, the advisor, can take their time to open and fund those accounts on Fidelity's institutional platform by the 2025 business tax return deadline, including extension in 2026. And when the client and the advisor is ready to open up the accounts at Fidelity, we're here to help do that. In other words, we pre-fill the paperwork that Fidelity requires to open up accounts for the plan that's being provided by us, by my solo 401k financial. So the role of Fidelity here is just to provide the accounts. Fidelity offers their own solo 401k, but that means that you're using their documents. So it's going to be a much more vanilla plan. It's not going to allow for the mega backdoor Roth contributions. It's not going to allow for the solopreneur to claim the $1,500 in tax credits. It's not going to allow for 401k loans. It's not going to allow for Roth conversions, right? Fidelity is not going to provide the ongoing compliance support, such as the 5500 EZ or the 1099R. But at the same time, even though Fidelity does offer this basic vanilla plan, Fidelity will also open up accounts for those clients who bring their own plan documents. So for third-party plans, such as our clients that obtain the solo 401k plan documents with the advanced features for my solo 401k financial, but then open up their accounts at Fidelity. So as I mentioned, we do make it easy to meet the deadline. You could think of it as just a 3-step process. Step 1, complete the online application on our website and make payment. You can find that quickly and easily at mysolo401k.net. Just click on open account and then solo 401k, click get started under solo 401k. Once we receive that application, which is just 10 simple questions, and payment is made, we prepare the documents within the same business day. So the documents are in place so that you can meet the deadline. That same business day, we send an email to the client. We'll also copy the advisor. Now, what a lot of advisors and their clients find works well is to include the advisor's email address on the application. So in that final question, where we're asking for the name of the plan, where we suggest 2 words in the word trust for a total of 3 words. Let's say you call it Smith Wealth Trust. You can add additional notes. You can add additional information. For example, Smith Wealth Trust, please copy, then insert the name and email address of the advisor. So now we'll include the advisor on communications. So once we receive that application and payment is made, within that same business day, within hours, we will send an email out with a link to our document portal, our secure document portal, where the documents can be downloaded. The documents that were drafted specifically for the self-employed business that creates that solo 401k plan. But we don't need the documents back by the end of the year, because again, you don't need to open up the accounts by the end of the year. So that's taking those steps will then enable the solopreneur to make all types of contributions for 2025 by their business tax return deadline, including any timely filed extension, whether it's pre-tax, Roth, mega backdoor Roth, whether it's employee or employer. They can take their time to determine how much they want to contribute and actually open the accounts and make those contributions in 2026. So that first step, just to dig in a little deeper to explain, is to submit the online application. Again, you can find it quickly and easily at mysolo401k.net. Just click on open account, then under solo 401k, click on get started. So we need information about the solopreneur, about their business, right? Their name, the name of their business, right? Maybe it's a sole proprietorship, in which case it's just their name as a sole proprietor, their address, the name that they want to call the plan. Then we use that information to draft the documents. So we use our IRS approved plan documents. So it's going to include an adoption agreement, a trust agreement. We provide a copy of our IRS favorable determination letter that confirms that the plan that's being established is a qualified plan. So again, an email goes out with a link to our secure portal. We'll copy the advisor if their name and email is included on the application. So now the advisor has access to the portal as well. So then the client can download the documents, use the email following the email, they complete and sign the documents. In other words, the cover email specifies where to complete and sign. They can use electronic signature software if they would like to do so. And they've met the deadline. They don't need to return the documents back to us by the end of the year. So now they can take their time to open up accounts and make contributions in 2026. Now, when they're ready to open up accounts, which could be again in 2025, or again, they could wait until their business tax return deadline, including extension in 2026. But when they're ready, they'll return those completed and signed pages. So in that same email, there's going to be a secure upload link back to the portal where they can upload the completed and signed pages, which again can be signed electronically if they have electronic signature software on their computer. It's certainly acceptable to use that to complete and sign the paperwork. They'll also submit a next steps questionnaire, which is linked in that same initial email that goes out that first business day, that when they first sign up. So that's the questionnaire that we use to determine where do they want to open up the accounts. So the client can submit that next steps questionnaire, or the advisor can submit it on their behalf. So you'll see on the drop-down menu, one of the options is Fidelity Institutional. So that would be for accounts at Fidelity that are associated with an advisor. So then we would prepare the paperwork that Fidelity requires to open the requisite number of accounts at Fidelity Institutional. For example, if there's two participants, say a husband and wife that are both working in the same business, both participating in the solo 401k, that's going to be two accounts at Fidelity. Fidelity refers to these as investment-only accounts. Or let's say that the solopreneur wants to make multiple types of contributions, like pre-tax, Roth, and maybe mega backdoor Roth. That will also require separate sub-accounts. So we ask about that as part of the next steps questionnaire. Based on the response, we will prepare the requisite number of accounts. In other words, we will prepare the paperwork to open the requisite number of accounts. Once the accounts are opened at Fidelity, now it's time to fund the accounts. So the accounts could be funded in one or two ways, right? It could be either or both. The solopreneur can fund it by making contributions. This is where they're saving their earned self-employment income to the solo 401k. And again, as long as they sign up with us by the end of the year, they'll have time to make all types of contributions by their business tax return deadline, including extension in 2026. And we field questions every day from customers and their advisors in terms of educating them on those contribution limits, the deadlines, etc. The other way that they can fund the account is by rolling money over from an existing retirement account, as long as it's eligible to be rolled over. For example, they can roll over funds from a former employer plan or a non-Roth IRA. And we have helped customers and their advisors roll over funds from hundreds of different institutions. So as you might imagine, each institution will often have their own unique transfer process. And we track that experience in our knowledge base to make it easy for new clients and existing clients to roll over funds to their solo 401k. So for example, we'll pre-fill the paperwork that's needed to initiate a rollover to their new employer plan, to their solo 401k. So as far as the FAQs around the 12/31 cutoff, what do I have to do by December 31st? Well, in order to preserve the right to make employee contributions for your self-employment income for 2025, all you need to do is establish the plan. How do you establish the plan? It's the documents, because a 401k is a legal entity. My solo 401k financial makes it very easy to meet the deadline because we do create the plan, right? We put the documents in place within the same business day when someone signs up. Do I have to open the bank or brokerage account by December 31st? No, you don't. Establishing the account is not necessary to establish the plan. You can take your time to open up the accounts. For example, at Fidelity or the bank or brokerage of choice, you just need to open up the accounts in time to make the contributions by your business tax return deadline, including extension in 2026. Do I have to obtain an employer identification number for the plan by the end of the year? No, you don't. Ultimately, an employer identification number will need to be obtained as part of the account opening process. But as we've explained, the accounts don't need to be opened by the end of the year. As part of that onboarding process, when the client and the advisor is ready to open up the accounts, we will obtain an EIN number from the IRS specifically for the solo 401k. So the IRS expectation is that a separate EIN number is obtained for the plan, and we obtain that as part of the onboarding process. So this is going to be an EIN number that's different and distinct than the EIN number that the individual might have for their self-employed business. Is the tax return deadline my personal tax return deadline, April 15th, or my self-employed business tax return deadline? Well, it is the self-employed business tax return deadline. So let's say that the business is taxed as an S corp. In that case, as long as they sign up by the end of the year, they'll have until March 16th, since the 15th falls on a Sunday. In other words, the S corporation tax return deadline, or September 15th, if they file a timely extension for their S corporation tax return, the 1120S. But let's say their business is taxed as a sole proprietorship. In that case, their self-employed business tax return deadline is one and the same with their 1040, right? Because they report that earned self-employment income on Schedule C of their 1040. In that case, as long as they sign up by the end of the year, they'll have until April 15th, or if they file a timely extension for their 1040, October 15th of 2026, to make all types of contributions for 2025 to the solo 401k. If I adopt a plan in December 2025, how can I make contributions based on income that I earned in January 2025? Well, the industry best practice and our practice is for the plan to be effective as of January 1st, 2025, even if you adopt the plan in December 2025. So that means the solopreneur is eligible to make contributions for any self-employment income earned and reported for 2025. My CPA tax advisor is informing me that employee contributions must be made by December 31st, 2025. Are you sure that I can make this contribution in 2026? Yes, we are sure. And this is a common point of confusion because the contribution deadline for a full-time employer plan, such as one that you might have through a day job, would need to be made by the end of the year. But the rules are different for self-employed individuals. And this is clear based on IRS publication 560, which is the landmark guidance for self-employed retirement plans like solo 401ks. The rules are different for self-employed individuals. And those rules provide that as long as the plan is established by the end of the year, the solopreneur will have the ability to make all types of contributions, including employee, employer, and even voluntary after tax by their business tax return deadline, including any timely filed extension in 2026. And from a policy perspective, it makes sense because a lot of self-employed individuals don't know how much they've made until after the end of the year. And of course, their ability to contribute is a function of how much they've made. So they need to determine that, and the rules give them time to determine how much they can contribute and to determine how much they want to contribute. All right, that takes us to the end of the slides. Thank you so much for joining. We're going to turn to the questions. If you have additional questions, please chat those over now so that we can be sure to get to them all. We also want to invite you to our community. We have the largest community of solopreneurs around these topics, advisors. It's totally free to join. All are welcome. You can join quickly and easily at mysolo401k.net/my-community. There's a lot of ways to learn and to share the knowledge on there. For example, we have vibrant forums. We have a library of videos and webinars. So please don't hesitate to join. Let's go to the first question. Can spouses tax filing jointly with separate businesses and separate solo 401ks each claim the $500 EACA tax credit? No, they cannot. So a control group, which would include two businesses that are owned by two individuals that are married, can only claim one tax credit. So they can share it though, right? They could split it or allocate it however they want, but it can collectively only be $500 per year for each of them for a total of 3 years. Great question. So if this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that this content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So we'll give it a moment to see if any more questions come through. It looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.